The webinar will begin shortly. All attendees are in listen-only mode.
Closing bell for March 19th, 2025. I am Keith Harwood here for Yellow Tunnel and Tradespoon. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Tradespoon, Yellow Tunnel, and myself are not investment advisors, not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information. And finally, myself and or the team at Tradespoon or Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. So please do keep that in mind as you evaluate trades for your own personal investment and trading portfolios suitability. Well, fight by the bulls, right? We got Fed out and everybody seemed pretty happy with what we've got so far, at least. High yield seems to be the best performer right now, high yield bonds, so people will go in a little bit riskier. And speaking of flight, jets are actually taking off a little bit. Boeing is doing very well right now, for example. Market looks ready to start to get a little more aggressive buying. And actually, I think one of the things that I see here is some fight for the bulls in the names that looked like they were maintaining short positioning, and some flight from those names that were getting aggressive on the long positioning. Progressive, for example, is down quite a bit today. So we're getting a little bit of rotation again, more into risk and out of safe havens. Probability of success is a little clearer to the upside now with the Fed behind us. Return on capital, now a little bit cleaner to see and favors the bull. With the VIX lower, we need a lower move to get that profit. On the way down, it was a difficult spot. The VIX was high, but we were chopping. Up one day, down the next two, then up one, then down the next two. So there was a lean towards the downside, but the bear wasn't always getting paid unless it was an active bear, hovering on oversold days, reinitiating as we get bounces. This bounce is starting to put a little bit of a damper on that concept that we can re-engage the short into an upside move. So we'll see how this kind of plays out, but right now, this looks optimistic for the bull. I think we've now gotten a little bit more confirmation of this trend change. Yesterday's down day completely negated. Now back up, now near Monday's highs. Looking to take those out. Small caps above Monday's highs. We're getting more aggressive. Bitcoin, more aggressive to the upside. And with the VIX getting lower, more time becomes easier, more space, i.e. a lower stop loss becomes a little bit tough because those out of the money puts are getting cheaper and cheaper the further we get away from those lows. So the truths are further away. It makes it a little tougher for the anti-bearish trade, but never fear, it seems like the bullish leverage trade, the debit call spread, starts to look that much more attractive. And for those worried about hedging, now could be a time to reinitiate, re-engage some of those hedges as the VIX comes down, puts aren't coming up or anything. They're getting cheaper, both based upon price going higher and VIX going lower. Some of the signals we were seeing last week about the VIX peaking on March 10th and then not coming up anymore as we hit the market low on March 13th seem to be coming to fruition this time. Those steps forward we were taking last week are now getting confirmation. We're getting more steps forward for the bull. Beware of chase trading, but continuation trading is different. So looking for some of those names that have started the move and may look more like they're in the middle of the move, not those names that have gone too aggressive to the upside and now are overbought, or RSI 72 and things like that is, I think, key. Because right now, the market looks like it's chasing value, not chasing the momentum. And what that leads to is names like Jets Firm, names like ARK, ARKK Firm, Small Caps Firm, looking for some of the value there. I think this bottoming process is getting closer and closer and truer here. Still generally in the comfort zone, nothing significant in the shift today, but it is Fed post-Fed. So slightly lower is okay. It's not lower because of recession concerns. There are concerns stated in the Fed meeting minutes about the economy going forward. but they haven't shifted their policy on expecting 2 more rate cuts this year. Bitcoin, perhaps our biggest barometer of the risk appetite coming in post-Fed, is up nicely today, above the 10-day moving average, closing in on the 20-day moving average, highs since March 10th. March 10th's high was 86.9. Today's high is 85.8. Honestly, I'd be shocked at this point if Bitcoin doesn't get into the 90s. It looks like that is in a continuation mode, ready to keep rallying. MNFI coming off those lows had gotten down to 21 and change, now up over 31. Let's just get straight to the real markets. S&P is now above Monday's high. So 5 minutes ago, we were below, now we're above. That's huge. The 200-day moving average is also going to be crucial. Big move today. Higher high, higher low, confirming, loving what the Fed said. The VIX now under 20, getting back into that normal range, close to it at least, where like 19 was kind of the high range, 19 and a half. We're at 19 and a half right now. Lows around 15 and a quarter. That tells me we got some room to run here potentially. And it looks like people are selling put spreads still a little bit here. SQDEX up slightly. So selling at the money, not raising up the puts too much, relatively speaking. It seems like we're getting into, credit put spreads or just selling premium to the downside or at the money. So like roughly speaking, generally speaking, people are just selling the VIX and selling that volatility, worrying layers of those puts as we rally, actually where SQDEX may go up. Well, we go up if people are selling put credit spreads to define the risk. Re-engage on the interest in saying we're not going to go back to lows, 550 and below in SPY, for example, saying it doesn't seem likely that we're going to get down there. But to cap my risk, maybe I sell a 550, 520 put spread. It's not a huge premium, but if you go out a month, then there is some premium to that. When we go over to the other big indices, tech, a little bit below Monday's low still, lagging a little bit. Semiconductors are lagging, only up 2.5% right now. Tech up 2.25%. I'm looking for that to normally be up 3.5-ish% with tech up as much as it is. So it's about 1% behind what I would normally expect if we were getting some true tech leadership. But that's, I think, in part because the leadership really seems to be coming here from small caps. In line with the tech move, but look at that move relative to Monday. We're above the Monday high, didn't have as much of a dip yesterday, staying above the 10-day moving average, closing in on the 20. The shorts are getting out, is my belief at this point. Small caps have been the weakest, well below the 200-day moving average. Tech, a little closer to the 200-day moving average. S&P, almost back to the 200-day moving average. So small caps being the weakest are being the ones that are being bought. And that also goes with jets. Up 3.5% today, now above the 200-day moving average. It had been one of the leaders, so it didn't go as far below the 200-day moving average, but it had gotten hit so hard over the last month and a half, that naturally it looks like people are starting to cover. United Airlines, 6% today. Delta Airlines, up 4.5% today. We're starting to see some relative strength here from the big airlines. American Airlines, up 4.5% today. And I think the biggest move today within that jet sector is Boeing. Just a massive move for Boeing, actually getting back into the early 2025 mid-range levels. So seeing Boeing now above not just the 10 and the 20 and the 50, the 100 and the 200, it's above the 50. It's above every key moving average that I look at here. Boeing flipped from way below the 50-day moving average, nearing $145 to 173 in a matter of a week. All right, so we're seeing signs out there that are good. And I mentioned it, so I'll bring it up. High yield up 0.75%. Doesn't sound like a lot, but 0.75% for HYG is a lot. This is normally an index that moves a third. Applied volatility is a roughly 1/3% per day, right? 5/16 is 0.33, call it 0.325, something like that. 0.3125, 0.3125. So it moves a 1/3% per day. So we've had 2+ standard deviation move. And you can even see here, like they're now today, those were offered at 4 cents. They were 3 at 4 on the close. They're up to 18 today. That's that kind of just asymmetric, parabolic, whatever lottery ticket payoff for HYG. We're seeing a lot of that as well in some of these Bitcoin related names. MSTR up 8% today. Marathon now up 5.5% today. Let me focus on MSTR for a moment here as a leader of the group because it is the biggest Bitcoin holder. Approaching that 50-day move, the market hit the lows. March 6th highs, really close to 320. Marathon at that time, just for reference, its peak was around it was post earnings. It was a little earlier in March, was around 10. These are starting to play a little bit of catch up. I don't think this move is over for the Bitcoin related names. I'm in the Marathon April 16s. I'm still down money on them, but now I've got signs of hope, and I'm kicking myself for not buying the 12.5 calls from March this morning. I was debating it as I saw some buyers of Riot 8s expiring this week. There's some pretty good aggressive buyers here on the 8s trading around a dime. Now they're up to 17. So nearly a double intraday. The MA since the 13s were 15, and I should have just done a lottery ticket with them for the Fed, but I would have said, oh, I'm glad I didn't do it. Because I also didn't buy, Duke 120s for this week, although those would have still been a winner because I was looking at those for 30 cents and now they're up to 40. Taking a little bit of a heat so far on the April 1.25s and Duke utilities not being the leader out of this since it's more of a safe haven at 17%. DG for the paid traders. Volatility falling is offsetting a little bit of the gain, but if we get continuation with DG now above yesterday's high, trading on session highs, it looks like 85 is the target price. I don't know if it can happen by Friday, but I should hopefully see some significant appreciation in DG if that just continues its current momentum. All right. Speaking of DG, that's also on the aggressive power trader list for today. I do like this. April 85s are the way I'm in it. I think that's a good, smart way to play it. If we get below the 10-day moving average, that would be a sign that this move is not real. But as we currently stand, that 10-day moving average is rising by about 85 cents a day. So tomorrow at this time, this 10-day moving average should be up to about 80.5, and that's a good way to have a trailing stop on the position for somebody looking to hold for multiple days here on something like DG. But DG, clearly not the big winner here, 35% implied volatility. That means we should be seeing about 2% per day, and we're only 1.25. At least it's the right direction, and that's helping a little bit. Let's see now. Oh, and the other ones for that, looks like it may be trying to reject the 200-day moving average. I'd wait a little bit on this. Above the 200-day moving average, it starts to set up for 350. But we're just towing against it right now, creating an inflection point as we toggle between the 10 or the 20 and the 200. And right now we're at the kind of peak levels of that. Intel, it's so news driven by the new CEO that I'm leery of going aggressive on Intel, particularly given that right now it seems like the buying is coming in those names that were more shorted or near lows as opposed to those near highs. Speaking of which, Progressive, as I mentioned, down 4% today. They had earnings. They are bouncing back, but IAK had been such a big driver recently. It looked like it was getting ready to break out, and it's pulling back. Progressive's not helping that. Allstate getting hit, probably correlations to Progressive as well as some of the Fed reaction, right? FXI roughly unchanged. It's been immune to a lot of this fundamental news. So just, I think, trade that almost independently of the broad stock market. I do still like JD within that sector. It pushed through 44. It is holding that level, and I like JD with outright long calls, given that the implied volatility is now 49%. The last 60 days, it's been 53%. It has been a choppy trade, but it is above the range. So it looks to me like a better long call trade than a call spread. But something with leverage, if you really need to do a spread, for me, it's more like a 45-50 call spread, but I like just outright long 46 range calls here. 45 delta, but has good leverage if China starts to lead the market again. Okay. What else do I want to really hone in on here? Japan, kind of interesting as we start seeing solar names looking good. CSIQ, Canadian Solar, up 10% today. They've got earnings next week. First Solar, for a relatively heavily shorted name, it's up about 2.5% today. Sunrun, up 4.5% today. So we're seeing some of that coverage from those names that are broadly more shorted, as I mentioned. We still normally expect, I guess, about a 5% move in Sunrun every day. So it's in line with that. But seeing some of these names moving off the lows, I think is broadly good for the market. And actually, Duke's starting to bounce here as we go into the intraday. So some of these utilities, the initial reaction on the Fed news was kind of muted, and now it's starting to get a little bit more buying. NEE has bounced a little bit. You can look at XLU, it's up about 0.4%. It's kind of a dog. XLF is getting more of the money flow here. Post-Fed announcement, driving higher. And on the 6-month chart, I love the way that financials are looking right now. And I should touch on Vlad here has it going well here in Morgan Stanley with that May 120, 125 call spread. Looks really strong here. My honest fear was that it may not be high enough. Like a 120, 130 feels a little bit better, but at the end of the day, going to 130, woe is me. I made a little bit less in a 120, 125 than a 120, 130 in that scenario. So overall, it just looks really strong. And you can see actually IBIT. So Bitcoin pressing against those highs still looks very strong here. Nice, Fred. So you're playing around with the DG. I like holding it overnight at this point, but if you want to trade it intraday and have success with it, that's a solid strategy. Kind of buying some of these little dips that we get in the market and then selling them out into highs to build up some equity through the trade. You can see we kind of rallied, pulled back, rallying, and now looking like a potential for continuation. For me, I'll just continue holding. Another one, honestly, I thought about it for both DG and Duke to double up the position today and decided not to because I was worried that the Fed was going to set us into a bear mode. And this was actually partially from my own psychology on trading. I figured the opportunity was better if the reaction from the Fed was bullish. So I had more opportunities going forward in that scenario. So I don't want to lose money and have less opportunity to make money on a bearish response in the short term. I wanted to have that. I get my kicker from the Fed, build up a little bit of cash from it, potentially here into the end of the week, and then look for greater opportunities next week. And I think we're going to see a lot of opportunity in the next couple of weeks now that the Fed is behind us and it came out with a bullish response. You were more aggressive or more passive than I was, even Fred. I was looking at it for 50 cents and they were offered and I thought about it. And then I was debating this week's calls for 30 and said, I'm sitting here trying to force a trade, I think, and I should just not bother. But, I could say that about any stock almost right now, right? A couple hours ago, I was looking at all and I passed on all of them and they all would have been great thanks to the Fed, right? So, like I said, I think the opportunity coming forward for the bull is going to certainly be there. We may get a little pullback, in the next half hour, and then I think, I wouldn't be surprised to see us close near the highs as we digest. And the bull still needs to get a little stickier. So the day trader is naturally going to be selling near the close. It's whether the investor is buying on the close to offset and more thanks to the Fed. And we may actually see more of their reaction in the morning as people really fully digest what they feel is most important from the Fed's announcement. They had their trigger points to go in and say start to buy, but now for the aggressive buy, they want to take some time to really think it through before saying I'm ready to buy $1 billion worth of stock. So, so STNG. I was looking at it on this day and I didn't do anything yet. So that was Friday. I started looking at the tankers on Friday in response to also what we were seeing in XLE. Now XLE is broken, nearly broken out of the range. ExxonMobil is above the 200-day moving average. But more importantly, STNG is starting to look interesting here again. The fade may not be great. It may have just gotten more of its rally from some of the market behavior here, and now getting faded. Here. Sorry. Okay. And anyway, I think that the STNG is starting to look more likely of a move back toward that's nearly 20%. Something like before I think we were looking at much significantly higher levels, but like a 45.50 call spread seems like an interesting play here at 76. Very much out of the money and needs a lot of continuation. 46.5 would be an initial potential resistance point, but all the way up to 50, that's that range. And if we start seeing more money flow into TK tankers, which is doing decently today, Nordic American tankers, again, doing kind of decently today, it tells me that people are more focused in on those tanker names as I start to see some of the basket working well. So I keep, I'll try to sit a little closer to the microphone as well, just in case it's me, Fred. But yeah, I think STNG looks interesting. That's the difficulty point here for me. Other names that I've been looking at recently that are getting more and more interesting are like WMB. We're above the range since the drop back there. Was that the DeepSeek AI drop for WMB? So we're above the range post DeepSeek AI announcement. That looks very attractive. LNG, for those looking for a little bit more room to the resistance points, that looks very attractive. I don't want to go into United Airlines. I mentioned them, but I don't want to go into the airlines yet. I can maybe make an argument for the anti-bear, saying we probably stay above 70 here. Delta saying maybe we stay above 45 here. 44, I guess, sorry. Those are not necessarily as bullish yet for me. And thinking of that with STNG, I mean, there's an argument to be made for financing the call spread with a put spread, but that's not a lot of premium, 10% for a month. Makes me a little hesitant to say I would be willing to sell the 37.5, 35 put spread. I think we probably stay above it. Is that a good use of capital? Probably not. The tankers, maybe it's not. I guess the long story short is it's probably not the best trade out there. So if I'm filtering it down, it could be a good trade, but it's probably not the best trade. A little bit better liquidity in some of these financials, as I mentioned, can Citigroup get some chops going here? Morgan Stanley's clearly doing very well. Goldman, can I do something financials, or even the regionals? KeyBank, somewhat attractive. Zion, somewhat attractive. Regions Financial, somewhat attractive here. So if those big banks should be bought first, just because they're greater liquidity and they should be the bigger benefactor of a strengthening economy, if that's really the play we're making here. But some of these regional banks could start to look really attractive if I start to feel like I'm missing out on the bigger banks. And speaking of which, actually, Capital One, it got hit hard on Monday because of concerns about the merger with Discover Financial. And if that starts to go into the backdrop, maybe it's got a better scenario here being pictured. Visa looks pretty strong here. It's never even got below the 100-day moving average. So that would be Fred, that would be kind of the in the middle ground. So buying a leveraged call spread like a 45.50 and financing it with selling a 37.5, 35 is a very similar payout to just selling what you said, the 42.5, 40 put spread. We go up, it makes money. We go down, it loses money. It's got some P&L swings between 40 and 42.5, obviously. The other side of it is saying we probably don't make a new low, but we have to make some progress in the stock price to make money on the call spread versus a put spread. So the call spread right now, as I mentioned, is about 70 cents. The put credit spread's around 40 cents. Small capital outlay, needs a 8% rally to make money. 42.5, 40, if we just sit where we're at, it breaks even. If we rally, can collect that buck and a quarter. In the short term, very similar payouts. But then as we get above 45, obviously the call spread starts to really kick in. So it depends upon how aggressively bullish one wants to be in STNG. I just don't know that it's the best trade out there, I guess. So I think I just hold off on STNG and try not to force the trade there when there are other trades that look a little bit more, a little easier, we'll say, right? Palantir not really participating on the upside. I'm sorry. So if you couldn't hear that last part, Fred, I'm thinking that with STNG, there's probably better trades than STNG out there. The momentum's already there for ExxonMobil. If looking in like more of that oil general area, DK or NAT for a lower dollar, potential spike element, right? Like in at 265, out at $3 in NAT would be the target price. And if we go below 2.5, I'm out. So risking 14 to make 30, 15 to make 35. Also want to see, I didn't check yet. Yeah, so Rigetti's actually down today. IonQ, some of the higher momentum based tech names, they're not getting the money flow yet off of this. Oops. Rumble, not really. App loving, not really. So some of this big momentum tech, not really getting the money flow. ARC looks pretty strong today, but still below the 200-day moving average. Part of that's Roku. Roku's up 7.5% today. And that looks particularly strong. If you don't like Roku independently, ARC is a big holder of Roku. And that's part of what I think makes ARC look a little bit attractive if we do start to go after tech instead of small caps and buying in some of the shorts. Yeah, I like ExxonMobil, some of the other energy. Occidental, if you like Warren. ExxonMobil, just on average. 120 maybe the target. But that can still be some leverage here with like a 115, 120 call spread for 230, kind of paying close to half the max value. But it looks like a higher probability trade and has a possibility of 120 range here for ExxonMobil if energies really get kicking. Or just go to XLE. The ExxonMobil links to names like Chevron. Looks like 97 is a target. And going out to April, I can leverage that with a 97 target price. A 94, 97 call spread for about 95 cents right now. That looks decent to me too. So I think XLE, XLF, those are kind of in focus for me in terms of sectors more so than some of the others, given the moves we're seeing right now. What else is rotating around right now? XOP is doing well. XRT. XRT is having a strong reaction, up about 2% today. Does retail really benefit from this? Maybe just confidence, consumer confidence starts to rise and people start spending again. I'm not sure I'd go aggressive there. AEO, I think, was starting to rotate around above the 10-day moving average. Maybe Abercrombie and Fitch, kind of the same as AEO. About Restoration Hardware. And that might just be the shorts covering Restoration Hardware a little bit. So it seems like we're getting some of that short covering after stalling near the lows for a lot. It just means, are the shorts out? Are we going to get a squeeze, or are we going to get a little bounce there and then focus back in? Frankly, like NVIDIA and Palantir, right? NVIDIA lagging here, Palantir lagging a little bit on the move. I got to think that, honestly, if I'm looking for a momentum trade that could be lining up for tomorrow or Friday, it's Palantir above 89, maybe above 90. So it's $4 away, which is basically a random walk day, roughly one standard deviation move. But if we can get up a little bit more in Palantir, I start looking for 110. So pressing against those levels, 10-day moving average should provide some support. Could enter early here using the 10-day as a stop with the like 110 range as a target, or wait here in Palantir as they start looking for a potential credit put spread when we're trading here and saying, well, if we stay above 83, maybe we'll go with 83. If we stay above 83, it's that should be a pretty good support level for now. Bigger support at 78.5, but 78.5 doesn't give me enough premium. For next week, 78.5 is 17 cents for the 77. Probably a better trade tomorrow, frankly, because if we rotate tomorrow back into growth tech, some of the chop of the last month. All right. Look at what else we've got moved. Industrials, so DIA, the Dow Jones Industrial Average above the 200-day moving average. So that's first to cross the 200-day moving average of the Dow Jones, S&P, tech, and small caps. Getting to industrials, got to look at Caterpillar. We already know Boeing is doing well. Lockheed Martin, that's been grinding up. We have FedEx earnings tomorrow after the close. That could start showing an interesting earnings trade. I don't want to go into FedEx on a directional trade without earnings since they're tomorrow after the close. UPS does not really trade heavily correlated, but like Dow Jones, other big holdings like Goldman looks really good to me. If Dow Jones is going to be strong, then there's some momentum for Goldman. If financials are, it's a higher dollar, so it's a more expensive per contract trade than like Morgan Stanley or Citigroup, just because of the lower dollar price. But if it can shine from some ETF flows, that could be something to certainly watch there. This dude coming around now. It's 119.25. Let's look at like the 5-minute chart here. Yeah, kind of came back around, but stalling. As we go into the close, DG kind of stalling, Duke stalling, everything kind of stalling. An hour of rally followed by questions of, is that all that we got from the Fed? And it might be. We have the rally from 2 o'clock to 3:15. Momentum comes in. The profit-taking day traders or the longer-term investors start to push it higher potentially. Best thing for the market is honestly probably to close closer to 570, show that there is some more investment flow coming in and not just the people taking the money on the buy right after the Fed announcement. But again, we'll just have to watch that, right? I don't want to trade either direction on it. $1.50, that's probably about right. If day traders dominate, we go probably down towards 567, maybe a little lower. If the investors dominate, we go towards 570. There's no R&R in that. So nothing aggressive into the close today, more of just using it as a potential signal of what's to come, I guess. I want to pull this up here. Dollar. So the dollar reaction to the Fed is also potentially important here. Actually, so far, kind of a non-event. So I guess that's nothing interesting there. Dollar yen, slightly weak now. And we saw precious metals bounce. So I guess that's natural. The dollar yen was weak, dollar strong, gold and silver up a little bit more. Certainly not the dominant move today, but gold's still hanging near the highs here. That's a bad print showing that drop here in the last couple minutes. There we go. So a little strength off of the Fed. Yeah, I honestly think this HYG move is the most important part of all of it. If people are going after high yield, that tends to mean bullishness for the market and bullishness for tech. And we've had some big drops in this, the last Fed announcement in December, very bearish HYG with that drop in the market. I mean, you look at tech on the last Fed announcement there, that was starting some of this chopping downward momentum. We may have some chopping upward momentum here back towards 500 off of this. SPY had the downward chop coming off of it. But we may have a little bit of chop in here. We tend to have a little less chop on the bull side than on the bear side, but people looking to potentially buy dips more aggressively now, and that may mean that the dips don't come. XLY is doing well here. Consumer discretionary, getting close to that 10-day moving average. Amazon, that looks like a put credit spread to me. That's a decent looking put credit spread. We hold up tomorrow. Amazon 192.5, 190 put credit spread for maybe it'll be 75 cents tomorrow instead of 78 right now. That looks interesting. That's one to watch from, in my opinion. We're close to the lows. Consumer discretionary getting some money flow today. Amazon looks interesting, bottoming out. And if money flow goes into tech, Amazon's got some room to run. Tesla, kind of similar, 220 for a low. It's already up 12 bucks today, but 220, 217 and a half for next week is about 50 cents. Amazon's better R&R. And we should look at this momentum stocks, and that's above the 200-day moving average. Momentum had been really getting hit, since the market highs. So seeing that recover should also be a good indicator potentially for tech and AI tech names. Okay. Yeah, let's see. On the last 2 weeks, what's the weakest stuff? XLY is actually the worst performer over the last 2 weeks. Jets is the second worst performer. So that's the interesting thing, I guess. The best performers on the day, two of the best ones were XLY, which over the last 2 weeks has been down on based upon like realized volatility. It's been down about 5 standard deviations, including today's recovery. Jets down about 4 standard deviations, including today's recovery. XLP, consumer staples, that's not rallying. That's down about 3.5 standard deviations in the last 2 weeks. That's the third worst ETF that I watch. Whoa. I bonked something and lost my screen. Yep, and now it's back. Can you guys see that okay? Yeah, it looks like the screen's back up. Bonked my desk and all of a sudden I lost connectivity for a second. Yeah, I think Amazon might actually be one of the better trades that we just kind of stumbled upon here. Just so you guys know, the best performer over the last 2 weeks is XLE. So the continuation today is particularly meaningful. Over the last 2 weeks was really the move from the lows to this potential breakout from the range. You can argue that the real breakout happens at 94.29, but getting above the February 20th high of 93.01, I think that's very nicely meaningful. And seeing ExxonMobil and Chevron is attractive from the continuation trade. The anti-bearish trade looks really good for Amazon to me. It looks like a commodities heavy buying here because, over the last 2 weeks, it's energies, gold, silver, gold miners, INDA, which is the India ETF. Apparently, the Fed was very bullish for India. I'm not sure why India's up. I'd have to look up if they had something going on with like their central bank or something like that. But India is making a run here as well. I'm kind of racking my brain here, thinking to market bounce here, and what I'm looking for as a result. I mean, SPY firming a little bit more here into the last 15 minutes. QQQ now up 1.8%, with IWM up 1.8%. So QQQ still underperforming a little bit, SMH still underperforming a little bit, and XLF still up 1.4%. Kind of in line with IWM, but I think these financials just look really interesting. I mean, I was looking at Wells Fargo yesterday. Wish I had jumped on that now. I mean, again, I could say that, I guess, about any stock. I wish I had bought them this morning, all of them. I don't think I would do Wells Fargo right now. I mean, if it's all about mortgages, XHB could be more bounce back there, and like Wells Fargo should normally do better with I mean, they've got a bigger mortgage book, right? KB Homes, or let's see what DHI looks like. What about DHI? It looks pretty capped to the upside, 145. Real as well has been pretty low. What's the 125, 125, 124, 125, 123 for next week? The low here is 124. You know, like a 125, 123 put credit spread in DHI looks interesting. No earnings for a month. It's got a pretty good support level. I think DHI and Amazon for put credit spreads are probably the most. I mean, Amazon's going to have a little bit more leverage and a little bit more risk because it is still tech. DHI has a little bit less risk, but a little lower return. So higher probability of success, lower return on capital. And really strong this morning, and it pulled back. Is there enough money in like a 207.5, 205 per credit spread? No. I'd rather do DHI than Apple, right? 40 cents for Apple or like 40 support. I think I'd rather go to DHI. Stay a little safer, given the firmness of support there. We can look risky. SMCI. You know, if semiconductors come in here, SMCI, I still think Apple Oven has that outside lottery ticket look to it. And if we continue to run the market, Apple Oven, IonQ, these are names that could get interesting quickly. They're the type of names that can go parabolic, right? AT&T, I'm curious now, actually. AT&T is actually firm today. Kind of was expecting AT&T, T-Mobile down a little bit. I would not be looking necessarily to buy AT&T. I mean, Duke should be kind of the same concept. It's been a runner. But like if IAK and some of these other names that have been some of the stronger performers during the market drawdown are just going to get flowed out of in order to move into riskier assets, these may not perform. What's all traded out right now? Speaking of some of those safe haven types, yeah. There we go. All trade down today. PM. Unchanged. BTI was the worst on earnings, right? I mean, it's kind of a long market play to potentially go short BTI to a certain extent, right? If we're losing the tobacco investment to go into the market and we start seeing sellers in PM or MO or BTI, that may happen with a bull market. I would not consider it correlated. Like if I'm long SMCI and short Altria, it's not really a market neutral trade. It has a very bullish market tint to it, right? But for something looking to potentially sell, I think some of these names that have been great performers for 2 weeks could be some of the better sales out there. What's the best performer? And the best performer for the last 2 weeks is STNE. Were they were not, I don't know. It's FSM. Oh, silver. It's been a straight line up. That's not an option trade though. $6 stock. Mosaic. Fertilizer names going up. CNQ. That's the that's BNQ. CNQ is Canadian Natural Resources. Canadian Natural Resources look good right now. Who'd have known, right? I actually watched this name. This is a Canadian energy stock. So if you're looking for Canada and energies, it's a stock trade again, not an options trade, but Baytex is Canadian oil company. Mm-hmm. Could be interesting. So the Amazon Oh, so you went for for this week's, I assume, or was it though a little lower? No, you did the 192.5, 190, yeah. So, or I think. Just seems like Amazon should be able to hold above like 192. I mean, 191.5 would have been the perfect strike, but we don't have that. Next week, a 190, 187.5, or a 192.5, 190 put credit spread. I mean, if we stay above 192.5 through the end of this week, then going into the next week's weekly put credit spread. So kind of collect the premium this week. If it works, try again next week. If it doesn't work, not a trade next week, you know? But it overall looks good to me as a put credit spread. God, that is maybe one of the best out there. Oh, and SPY getting a little bit hit here now. Let's go down to the daily chart. So the last minute, really, wow, just kind of out of the blue, dropped the buck. Well, you know, got to give the market the opportunity to digest. Somebody decided to come in with their selling pants on, but want to see how this market finishes up the day. But overall, I think that this is what the market needed for the bull. Seeing the rally off of the. I mean, even if we close around here, we're still up 1%. We can still hit the VIX a bit. We can give people a little bit more confidence on the bull side that this dip is now buyable. Yet doesn't mean we don't chop, but I think the medium term bull is starting to get backed up a little bit more here and get a little bit more of a confidence that over the next 2 weeks we can trade the bull side. You know. Yeah, Duke is staying pretty constant here into the close. Dollar General getting a little bit more. Got up a little bit more and then pulled back with that market dip. What else we got here for today that's big movers? Boeing is like the star right now. Yeah, I guess it's partially off of this. So they had the morning rally, and then a little bit of continuation. You can see Jets. Their rally was a little bit in the morning, and then full on after the Fed announcement at 2 o'clock before the dip. What else is going up here? RCL. It's kind of unwinding yesterday's fall. That's not anything yet. Above 220, it gets more attractive. But if the cruise liners are going to be good, I tend to think of Expedia being good, and Expedia is very good today. So Expedia ahead of the cruise liners. Carnival looks better than Royal. 24 target. Norwegian. That's got less resistance above. You know, certainly lagging, but it's had a nice recovery over the last week. Higher highs and higher lows almost throughout, other than before getting continuation today. These are names that look more interesting to me. Potentially, as the week goes on, this could be a good direction to go. I'm going to look to honestly, once we see the aggressive power trader names for tomorrow, I think those should be particularly interesting week, and I think those are good ways to help filter out some of the noise that we've got from just the general market rally here. Frontline now, it's a good move, but it's not that interesting for the overall chart. GE, yeah, it looks really good in GE. American Express for the financials, but 300 is a big round number. Could be an interesting trade given a low volatility stock, you know, a 2% per day mover, and looking at a potential for a 10 to 11% rally. I don't hate that as an alternative in the financial space. X is starting to run here. TJ Maxx, I was talking about those retailers, and TJ Maxx is having a really nice day today. Once it loads, another 2.5% today above the 200-day moving average. Is Target participating? I mean, that's been a dog since the last two earnings have been terrible, particularly the November earnings. But now, yeah, so people still don't like Target. Okay. I guess 2 consecutive bad earnings puts a little bit of a scarlet letter on Target, right? No, I didn't look at BK yet. Let me look at BK. Pressing the 50-day moving average, resistance above at like 88. I think there's better financials out there. It's been less of a pullback than a lot of the financials, but I think that the heavy resistance that's like 4% away makes that a tougher buy. Implied volatility too low to do a put credit spread. Upside a little bit limited by the resistance. I mean, I'd rather go to like Morgan Stanley. Got a bigger run up potential to 130, or Citigroup, run up potential to like 78. Less momentum to the upside overall for Citigroup in the past, but I mean, or even Wells Fargo. It got some resistance at 80, but that's 10% versus 4% for BK. And then if the financials continue going and BK breaks out, then it gets more attractive to me as a second, it's like sort of a second part of the move trade. So the first move back towards the highs, if it hits resistance and stops, it was only okay. I could make more money on the other nicks out. Then it becomes more interesting on a breakout trade. So yeah, I think BK, I would just, in long term, it may be the best out of the term. I'm looking for more of the potential for upside before there's real resistance here. The names that really got hit harder since we're seeing some of that short covering type behavior. Yeah, Wells Fargo, just attractive, but what about Bank of America? I mean, that's the same sort of idea, about 8 to 10% upside. If it can offset that early March fall, getting close to the 200-day moving average. SPY stalling here. I think the overnight move is going to be a big answer for this stuff. Spike, fade. Now, do we continue up and get back to 570 for the open tomorrow, or do we fade off of this and open up at like 563? If we open at 563 and don't find buyers on the open, that could be a bad sign that this it's another head fake for the bull. But if we open at 570, confidence for the bull is certainly showing that it's there, and we're ready to rumble and ready to fight for a recovery back towards maybe 585 or 590. So we'll see how it goes here. We're coming up on the close. Little bit of downside here into the close, so not seeing the aggressive part of that could be that digestion element, and thinking about what to do in the morning. So I think we got to watch that and see how it goes, and then get ready for Micron, FedEx, and Nike earnings tomorrow night, because now all of a sudden earnings names start to get more interesting if the market is stabilizing and not getting those 2% ranges every day. So earnings can start to get much more pinpointed and be a lot more exciting to trade out. So I'll take a look at those 3 tomorrow at the closing bell. Hope you all have a wonderful evening, and we will chat tomorrow. Have a good night, everybody.